Welcome to Uncovering Trusts, the Edison Group podcast, where we explore some of the most interesting investment trusts on the market. I'm your host, Liam O'Byrne, and today I'm joined by Milosz Papst, Director of Investment Company Content at Edison, to discuss our recent review on Utilico Emerging Markets Trust, ticker UEM. Milosz, thank you very much for joining us today.
Thanks, Liam. This is always an interesting trust to talk about.
So just to kick off the conversation today, could you perhaps start with a brief introduction to the trust, given the efforts that the company has already made in recent years to bring their story to a wider audience?
Yes, I agree. The trust was launched in July 2005 as a Bermudan investment company, which re-domiciled to the UK as an investment trust in April 2018. The portfolio is predominantly made up of emerging market infrastructure and utility companies. Since launch, the UEM has outperformed the MSCI Emerging Markets Index by, a considerable margin. The trust is managed by Bermuda-based specialist manager ICM Group, which had around $1.4 billion of assets under management at the end of 2025. ICM has more than 80 employees who operate from 10 offices around the globe. Charles Jillings has managed UEM since launch, and Jacqueline was appointed joint portfolio manager at the beginning of 2025, having been involved with the trust since joining ICM in 2010.
Great. So what is the manager's investment approach?
Yes, so UEM's portfolio contains around 70 of Jillings and Burr's most compelling investment ideas. They and the rest of the ICM specialists have worked together for many years. The team believes that it has unparalleled sector knowledge, which it sees as an advantage when holding investee companies to account. Jillings and Burrs employ a fundamental stock selection process and are unconstrained by benchmark allocations, although the MSCI Emerging Markets Index is used as a benchmark. To mitigate risk, there is a series of internal investment guidelines in place, as a maximum percentage of gross assets at the time of investment. Individual investment 10%, single country 35%, individual sector 30%, unquoted investments 10%, and top 10 holdings 60%. Gearing of up to 25% of gross assets is permitted, and currency exposure is unhedged.
Great. And can we now drill down into a bit more detail about how UEM's portfolio is managed?
The managers invest for the long term, avoiding short-term stock market noise, seeking companies that are trading at a discount to their estimated intrinsic value and that they believe have the potential to generate total returns of at least 15% per year at investee company level over a 5-year horizon. Preferred emerging market countries for investment have positive attributes such as political stability, strong economic development, an acceptable legal framework, and an encouraging attitude to foreign investment. Direct relationships with companies and local brokers can highlight changes in business conditions. There is a lot of travel involved, meeting with company managements and their operating assets, along with other contacts across the emerging regions. ICM is often the first phone call when an infrastructure or utility IPO is announced, and its investment specialists are used as sounding boards ahead of companies listing. UEM's investment team is supportive of its investee firms in terms of their capital requirements by participating in follow-on equity offerings at the right price. And given its specialty, the trust is often a well-regarded shareholder for many of its investee companies. Stocks are selected on a bottom-up basis following thorough fundamental research, including the construction of a detailed financial model and valuation targets from an investable universe of more than 1,000 companies. While UEM is not an ESG fund, its board believes it is in shareholders' best interests to consider environmental, social, and governance factors when selecting and retaining investments. ICM is a signatory to the United Nations supported Principles for Responsible Investments, a code of best practice for incorporating ESG issues.
Great. Now, returning to a higher level view, in essence, what does UEM offer investors?
Well, in the briefest terms, the trust offers differentiated exposure to above average economic growth in emerging markets. In August 2025, UEM's board announced a series of measures aiming to enhance the trust performance and narrow the discount. These were a new performance-based tender offer, regular share buybacks, a progressive dividend policy, and bringing forward the 2026 continuation vote, which was subsequently passed with a 97.6% vote in favor of the company's continuation. The next vote is in 2030, providing the managers with a good opportunity to build on their positive long-term performance record.
Moving on to the portfolio then, are there any key features or holdings that you would like to highlight?
Well, firstly, it is important to bear in mind that UEM's portfolio is relatively defensive with a beta of around 0.8%, given the nature of its investments in infrastructure and utility assets. Currently, UEM regularly discloses its top 30 positions. The board has decided to further increase transparency by including a full holding list in the annual and half-yearly reports. There is also a commitment, except in exceptional circumstances, to only invest in listed companies. Unlisted businesses currently make up a modest around 1.5% of the trust portfolio. At the end of April 2026, UEM's top 10 holdings made up 42.9% of the portfolio, with the top 30 holdings making up 77.5%. A couple of relatively new top 10 positions are Grupo Aeroportuario del Pacífico and Colbún. GAP is the largest Mexico-listed airport operator with 12 airports in Mexico, including 5 of the 10 most important and 2 in Jamaica. GAP also operates Cross-Border Express, which is a pedestrian bridge connecting a terminal in San Diego, US, directly to the Tijuana International Airport in Mexico, accounting for more than 30% of total Tijuana traffic. In November 2025, GAP proposed a business combination to integrate the CBX operations, which is expected to conclude in Q2 2026. Colbún is the second largest energy generator in Chile, 14%, with a 14% market share, and the 5th largest in Peru, with a 6% market share. The company has installed capacity of 5 gigawatts, 57% renewables, with 31% hydro and 26% wind, solar, with 43% thermal, which is split between Chile, 89% of capacity and 86% of revenue and EBITDA, and Peru, which accounts for 11% of capacity and 14% of revenue and EBITDA. Having sold its energy transmission business in 2021, Colbún is a pure-play power generation company with a highly regarded, successful management team. The company is trading on an undemanding valuation and has an attractive dividend yield. Now, UEM's portfolio is very different to the MSCI Emerging Markets Index, illustrated by an active share of around 98%, which is a measure of how the fund differs from its benchmark index, with 0% representing full index replication and 100% no commonality. The high active share is, of course, not surprising given UEM's specialist mandate and fundamental stock selection. Notable differences between the trust portfolio and the MSCI Emerging Markets Index include the trust's lack of financial stocks, which make up more than 20% of the index. UEM's largest country exposure by a wide margin is Brazil, which makes up more than a quarter of the portfolio, but only around 5% of the index.
Now, we've talked in the past about the 4 global infrastructure megatrends that UEM's managers believe will support the growth of the trust's investee companies long into the future. I think it's probably worth revisiting these today. Could you perhaps provide a portfolio example of each trend?
Yes, of course. At the end of April 2026, the portfolio was broken down as follows. Social infrastructure accounted for 36.8%. There is an increased need for social infrastructure such as sanitation, water supply, and transportation networks. Demand is driven by a rising emerging market middle class with higher levels of disposable income and the ongoing shift to urbanization. Sabesp is a Brazil-listed major global water utility, ranking 2nd globally by revenue and 3rd by served population. The 2024 privatization reduced the government's stake from just over half to 18%. Equatorial Energia acquired a 15% stake and is a well-regarded reference shareholder. Sabesp owns a 93,500 kilometer water supply network serving 28.1 million customers, which represents 98.6% coverage, and a 63.9 thousand kilometers sewage network serving 24.9 million customers, which is a 94.8% coverage, with a higher sewage treatment rate than the national average across 376 municipalities in Brazil's richest state, Sao Paulo. The company is benefiting from a favorable regulatory environment and has planned capex over the next 5 years that will approximately double its asset base without affecting its debt ratios. Sabesp is well positioned in Brazil's sanitation sector and can potentially expand to other Brazilian states that have low sanitation indicators even before reaching universal coverage in Sao Paulo. Second is the second main theme is energy growth and transition, which represents 28.6% of the portfolio, and includes investment in renewable energy areas such as wind, solar, and hydroelectric, as well as supporting grid infrastructure required to support economic growth and increase energy security. AXIA Energia is the largest Latin American utility company with power generation and transmission assets in Brazil. Its installed capacity of 44 gigawatts, which is 17% share in Brazil, is 100% from renewable sources. AXIA operates close to 75,000 kilometers of transmission lines, which represents a 37% share in Brazil. The company privatized in 2022 with no shareholder holding more than 10% of the voting power, despite the government retaining a 43% stake. Since privatization, AXIA has focused on simplifying its administrative structure, enhancing asset management, internal restructuring, and boosting capacity investment. It is currently well positioned as it has the benefit of holding a significant amount of uncontracted energy in an environment of rising electricity prices. Now, the third theme is digital infrastructure, 19.9% of the portfolio, which involves digital connectivity investment, which is occurring very rapidly, driving strong demand for data centers. An example of a company in this area is GDS Group, which builds and operates data centers in mainland China, mostly in prime locations around Beijing, Shanghai, the Greater Bay Area, and the Chengdu-Chongqing area. At the end of 2025, the company had 98 installed data centers with 1,735 megawatts of capacity, including 220 megawatts under construction. GDS has secured an additional 3,700 megawatt power quota with land allocations, mainly in Western China, which could be deployed over the next 3 years. The company primarily builds and leases out whole build-to-suit data centers for hyperscalers such as Alibaba, ByteDance, and Tencent on 10 to 15-year contracts, with 80% of data center revenues. Now, AI-related demand is strong. GDS won 281 megawatts of new orders in 2025. The company's modular build-at-scale approach allows it to deliver data centers to clients in months rather than years at a competitive price. GDS also has a stake in Day One, which is an international data center operator headquartered in Singapore with assets principally in Johor, Malaysia. GDS values its Day One stake at $2.2 billion based on a January 2026 Series C funding round, and the company may list during 2026. And then the fourth theme is global trade, representing 14.7% of the portfolio. Global trading activity is expected to continue regardless of President Trump's trade policies, with emerging markets making up an increasing share of global activity. An example of a company in this area is International Container Terminal Services, so ICT, which is a very long-term portfolio holding. It is a Philippine-listed global developer, manager, and operator of port terminals with a focus primarily on emerging market origin and destination ports, where volumes are less volatile than for transshipment ports. Having started operating in 1988, ICT now owns 33 container terminal concessions across 19 countries and remains circa 62% owned by the Horizon family. Geographically, operations are split as follows. Asia represents around 53% of volumes, including 25% at the flagship Manila asset and around 41% of revenue. Americas make up 29% of volumes and 40% of revenue. And EMEA, which represents around 18% of volumes and revenue. The company has long-term concession agreements for port assets that are well positioned to capture economic growth from growing emerging markets. Then ICT is benefiting from margin expansion led by operational efficiencies, tariff increases, and operating leverage. It has a strong management team with a history of successful execution. And in December 2025, ICT signed a 25-year partnership contract to manage Durban's container terminal, which is an asset requiring operational improvement, but will benefit if ships are rerouted around the Cape of Good Hope due to the war in the Middle East.
Fantastic. Some really interesting companies there. Turning to performance then, could you perhaps now walk us through UEM's record, both over the long term and also more recently?
Sure. Because of the nature of UEM's investments in companies providing essential services, the trust has tended to underperform the MSCI Emerging Markets Index during a cyclical upturn led by sectors such as technology and consumer discretionary, while outperforming in a falling market. UEM has a long-term record of outperformance versus the index, and since launch has generated a strong average NAV total return of 9.7%. Now, looking at more recent results, the managers were encouraged by the trust's performance at the end of March 2026, with its NAV outperforming in Q1 26 and was broadly in line with a very strong MSCI Emerging Markets Index over the last year. UEM benefited from its large exposure to Brazil, as in Q1 2026, both Brazilian stocks and its currency rallied, helped by higher commodity prices and expectations for interest rate reductions. Portfolio companies that have performed particularly well include water treatment business Horizon Valorização de Resíduos, which is now the largest holding, approaching 10% of the fund, and Manila Water Company and electricity companies Alupar Investimento and AXIA Energia. Unfortunately, April 2026 proved to be a tougher month, as although UEM delivered a positive NAV total return, it could not keep up with a significant 11.3% monthly return in the MSCI Emerging Markets Index, which pretty much recouped the weakness in the prior month. There was a strong rebound in sentiment regarding AI-related stocks. However, it is important to note that in recent months, UEM's performance has been much less volatile than the index returns.
Great. And moving on to dividends, are they an important element of UEM's total returns?
Yeah, that's a good point, Liam. More than 80% of portfolio companies pay dividends. With over 10 years of consecutive dividend growth, UEM is the only fund in the AAC Global Emerging Markets sector that is designated as an AAC Next Generation Dividend Hero. So far, 3 FY26 dividends have been paid, totaling 7.165 pence per share. If the pattern of dividend payments continues in line with FY25, the total FY26 dividend will be 9.585 pence per share, which would be a 5% increase year on year, and higher than the 5 and 10-year compound annual dividend growth rates of 4.3 and 4.1% respectively.
And could you perhaps also touch on UEM's valuation and gearing and fees?
Okay, let us start with UEM's discount. As discussed earlier in August 2025, the Trust Board provided an update on proposals to increase demand for UEM's shares, which over time should lead to a narrowing of its discount. There is a performance-based conditional tender offer with UEM benchmarked against the MSCI Emerging Markets Total Return Index. Performance is measured over 5-year periods. Up to 25% of the company's issued share capital may be tendered if the trust underperforms the index in the 5 years ending on the 31st of March 2030. The share repurchase program continues with the aim of UEM achieving and then maintaining a single-digit discount in normal market conditions. Also, the trust's annual dividend will continue to grow. As I said previously, the next continuation vote will be in 2030. And just a quick reminder that the 2025 vote passed with around 98% in favor of UEM continuing. Now, in recent months, UEM's discount has narrowed meaningfully. While this is a positive move, given the trust's more than respectable performance record and the style of its investments, I find it surprising that UEM's discount is wider than most of its peers. During FY26, ending on the 31st of March, around 11 million shares were repurchased, which was equivalent to around 6% of the share base. Moving on to gearing, on the 30th August 2024, UEM entered into a £50 million multi-currency revolving credit secured bank facility agreement with Barclays Bank. The initial term was 1 year, and the trust has an option each quarter to request an extension to the expiry date of the facility. And the current expiry date is the 28th of February 2027. At the end of April 2026, UEM had a net cash position of 0.6%. Now, in terms of fees, ICM is paid a management fee of 1% of UEM's NAV up to £500 million, 0.9% above £500 million, up to £750 million, 0.85% above £750 up to £1 billion, and 0.75% above £1 billion. A tiered fee structure allows shareholders to benefit from the increasing economies of scale that a large portfolio provides. In H1 2026, UEM's ongoing charge ratio was 1.5%, which was in line with FY25. And the board remains focused on regularly assessing the trust service providers and fees.
Perfect. Thanks, Milosz. Now, having covered all of the key areas of the UEM story, could you perhaps wrap up the discussion today by just summarizing your thoughts on this trust?
Yes, of course. The managers continue to have a high level of conviction in the positive prospects for the trust's investee companies, which are selected via diligent bottom-up investment process. UEM has delivered very commendable results over the long term. Since launch in July 2005 until the 30th of April 2026, the trust has generated a very commendable annualized NAV total return nearing 10%. The trust has a progressive dividend policy, a fully covered annual distribution, and an above-market dividend yield. Given the current very uncertain investment backdrop, UEM's differentiated, resilient portfolio of essential assets held by companies with strong market positions, sustainable cash flows, and well-regarded management teams should look increasingly appealing to global investors.
Perfect. Thank you very much, Milosz. Unfortunately, that is it for today. But as a reminder, we now have more than 50 episodes that we've recorded in the Uncovering Trust series, all of which are available free from your usual podcast provider. You've been listening to Uncovering Trusts, a podcast by Edison Group. For more information on Utilico Emerging Markets Trust and other investment companies we cover, please visit www.edisongroup.com.